Welcome everyone. Welcome to this week's market wrap, or should I say maybe the budget wrap, because it was Union Budget 2025 was announced today, and there's so much to unwrap there. So let's start from the top, sir. बजट आ गया है. पहले एक broad strokes समझ लेते हैं कि क्या होने वाला है मार्केट में, कैसे मार्केट ने रिएक्ट किया, क्या इम्पैक्ट होगा और what are you looking forward to?
Yes, a lot to talk, Vishu. Good evening. See, this budget was clearly all about the consumption push through personal income tax. And the second thing which comes to my mind is fiscal prudence. And clearly, that is sort of taking precedence over the overall anticipated hike in capital expenditure. So I think that is the three things I would say which stand out for the budget. While when you look at the market reaction was mixed. So broader consumption oriented stocks have done very well. We have seen negative reaction in the capital expenditure stocks. Largely because see, when you look at a capital expenditure as a segment, the overall allocation is 11.2 lakh crores, which is a similar number of last year. And if you sort of go from a revised number, that number is about a 10% kind of a growth on the revised number. So last year, capital expenditure number was at 11 lakh crore, got down to about 10 lakh crore because we had elections and government couldn't do much of a spending. So from there on, 10% increase, which means that effectively you are keeping the number same. But I think, like I said, the highlight was obviously the consumption push, what the government has given. And I'll come to capital expenditure a bit also. But market reaction was muted to certain set of stocks and very positive for a certain set of stocks. So let's come to the segment where things have been a lot more better. So when you look at, obviously, when you're providing a personal income tax benefit of, say, up to 12 lakh crores, up to 12,000, 12 lakh overall, and then I think it is definitely positive for the consumption and positive for consumer staples, the likes of FMCG. The challenge with FMCG companies has been that volume growth, while it was better in the rural side at about 4-5%, on the urban side, it was, I think, a multi-quarter low at about 2 odd percent. So obviously, it is going to help those segments, and we have clearly seen that move. Cigarettes, there was no hike in taxes. So again, a positive for a segment or a stock like, say, ITC. Then there has been some reduction in raw material duties for a product like, say, sorbitol, I mean, which is used in making toothpaste. So obviously, that is a positive for the consumer staples.
Absolutely. Consumer staples, of course, we saw the movement also. How about other sectors? How about slightly longer term? Let's talk about consumer durables, maybe.
Oh, yes. So consumer durable is another segment which benefits from this. So discretionary home appliances companies, the companies which operate in the room air conditioners, lighting and fixtures, fans, refrigerator, washing machine. So these are urban centric, and obviously they will find this growth impetus coming from the budget. Given the sluggish scenario, so you'll have companies like, say, Havells, Crompton, Blue Star, Voltas, or Whirlpool, which are expected to benefit. The other thing, what the budget has also done is that it has tried to correct the inverted duty structure in the flat panel segment. So there, the duties have been hiked from 10 to 20 odd percent. So what this means is that the government wants the flat panels to be sort of manufactured domestically. So obviously, this benefit or it will provide some benefit to these EMS companies which do a lot of contract manufacturing, the likes of, say, Dixon. And obviously, it is going to improve the overall export competitiveness of this segment as well.
Right, right. I think the budget gave a lot of focus on tourism as well, with the Heal in India to Udan scheme has been extended, or should I say expanded. So, what's the outlook there?
Absolutely. I think hospitality is one segment which was already doing well. And what the government is saying is that they will come up with a modified Udan scheme, and they will look to enhance the regional connectivity to about 120 new destinations. Effectively, they would want to carry 4 crore more passengers over the next 10 years, which is definitely a big positive, and we have already seen some kind of a reaction there. What they're looking to do is that develop 50 tourist destination in partnership with states. So obviously, it is going to benefit hotels. Then they are talking of medical tourism and Heal in India. So That is another segment which is going to sort of benefit hospitals. On top of it, the allocation for Ayushman Bharat has been increased by about 24%. So that is going to benefit hospital. Hospital is another kind of a sort of a consumption. And then for tourist circuit development, they have increased the allocation by 5x to about 1,900 odd crores. So I think it is definitely positive for big ones like say Indian hotels or Lemon Tree hotels. So I think tourism and hospitality, given the fact that this is one of the few sectors which has a good employment generation potential, has seen a focus from the government in this budget.
Right, right. How about our, let's say, it's not, let's maybe discretionary consumption is the right word for it, from our clothes to jewelry to luxury items. I believe that should also have a positive outcome.
Absolutely. I think, see, jewelry was segment was fearing that since we had seen good amount of gold imports, so there was an expectation that the probably custom duty on gold might go up. Thankfully, in the budget, there was nothing of that sort, and obviously that is going to benefit the jewelers. On top of it, this higher discretionary spending is definitely positive for a big brand like say Titan. And I think on the footwear or lifestyle fashion side, see what the government is looking to do is that they're going to come up with a policy for non-leather footwear with where the focus will be more of a domestic production and also for export of leather products. So obviously it is positive for the entire say footwear as a segment and also the QSR in general. Textile is another sector where things are looking better because what the government is coming up with is a 5-year mission plan where they are looking to improve the significant improvements in the productivity. Because what happens is that in case of cotton, the imports are not allowed and domestic yield is still sort of lower. So if we are able to improvise our domestic yield, the availability of cotton is going to be a lot more higher, and it is going to benefit the entire value chain, not only domestic but also the exporters as well. So which is why companies like say KPR Mills, Arvind Mills, or Gokuldas Exports could be a beneficiary of that.
Right, right. What's the outlook on auto sector now, which has been an interesting case in the previous quarter? First, we thought there'll be muted volumes, which apparently they did, which was not the case. And now with this extra budget in the hands of people, what would happen next?
Oh, obviously. So auto is one of the biggest discretionary categories, and our sense is that if the disposable income goes up in the range of say 30,000 to about 110,000, obviously it benefits. I mean, just to sort of give you some color, if someone gets a benefit of say 1 lakh, typically your ability to sort of take loan goes up by 4 to 5 lakh because per lakh EMI would be in the range of about 2,500 odd. So from that perspective, there are multiple options which become available. So one, obviously, what could happen is that there could be a rise in sales volume of entry level cars because first time buyers can afford small cars. The other is that it can also provide flip to the premiumization trend because existing buyers can possibly stretch their budgets and look for better compact SUVs and all of it. Same is the case with two-wheelers, so rather than sort of commuter bike, they can go in for a slightly better bike or with a bigger power. So you'll have the entire universe which is going to benefit the right from say Maruti Suzuki, M&M, Tata Motors, Bajaj Auto, and obviously Eicher is also one of the place which benefits from this premiumization trend.
Right, right. Let's get to the capex side of it. What has happened and what can we expect?
Oh yes, so the capex side of the market has really not taken well, largely because, like I said, it's only 10% hike from the revised budget estimates. But I think just to put things in context, last few months or last 9 months, we had multiple state elections. We had extended monsoon, so overall capex was down. So last 9 months, we have done a capex of about 7 lakh crores. Uh, Whereas what is planned now is that in the next 3 months, you'll see a capex of another 3 lakh. So obviously a significant improvement than the what we've seen in the past 9 months. On top of it, the budget has allocated about 11 lakh crores. So which means that in the next 15 months, we are going to see a capex of 15 lakh crores. Compared to that, in the last 9 months, we have seen a capex of only 7 lakh crores. So obviously, it is a positive from a lower base perspective. I think as and when the market realizes that this is not so negative the way it is, or the kind of reaction what we have got, our sense is that that segment of the market also will sort of get a boost from this.
Right. Uh, okay, so that was the budget aspect, of course, but there was one more big news which happened this week, which kind of shook everybody in the from markets to beyond markets as well, which was the DeepSeek AI, and pretty much everybody was looking at ChatGPT to Nvidia to DeepSeek, and there was so much there. What is your outlook on DeepSeek, and how much is it gonna actually impact the world?
I think two, three things. While this is still sort of unfolding, but our sense is that when you look at say, for example, earlier, the understanding was that the overall AI requires good amount of spending, especially hundreds of millions of dollars. And when a company or a startup company comes up with a solution at $6 million, so at a fraction of a cost, it does disrupt the market. But our sense is that overall things are going to remain far more constructive because of a couple of things. One, I think the overall use cases of AI will increase, and we all know that India has been a very cost-effective economy from providing a solution perspective. So obviously, it is definitely going to provide impetus from that direction perspective. The use cases are going to go up. The other fact was that see, when you look at from the vendor perspective, earlier vendors were spending good amount of money in the AI. Now what they can do is that they can possibly spend lesser amount there because of the cost effective solutions which you have got, and parallelly now they can do spending in the normal discretionary side. So from that perspective, I think it's a win-win situation for Indian companies or tech companies. And I think a good part also is that while this AI requires large language models, I think the government is looking to pare down the cost by again sourcing chips at a cheaper price, and which is where I think the entire ecosystem is moving in the direction of very cost-effective solutions being developed. Obviously, which will do a more massification of AI-based use cases and better adoption of AI. So from that perspective, at least we would want to believe that it is going to have a positive rub-off in most of the tech companies.
Right, right. Sir, there was a lot of results as well in the past week, which of course got overshadowed by the budget and the AI. So let's have a quick session on those results as well. Starting with I think L&T was the one of the big ones.
Oh, yes. So L&T order inflow last quarter was very good, but driven by international order. What the company says now is that Q4 you'll see more of order inflows from the domestic side. The other good part is that their working capital requirement, which used to be about 15.5, 16%, has come down to 12%. Core margins for the company has remained intact. So all in all, good. They are easily going to beat the revenue or the order guidance from that perspective. So very good set of numbers. Uh, uh, and again, I'll be very short in terms of saying that while I can talk more, but I think there are a lot many results which we need to talk.
Absolutely. We had two banks as well. We had Bank of Baroda, we had IndusInd Bank as well.
Correct. So both reported mixed set of or a muted set of numbers. So again, PSU banks have done relatively better, like Bob growing at 14.5%. I think what was a bit of a dampener was decline in margins, which we have seen for most of the banks. Otherwise, overall numbers were okay. I think for IndusInd Bank, which is the stock which has taken the maximum beating from the microfinance segment, I think the numbers were have remained subdued. But what we are also sort of taking a leap from the fact that this is a problem which might last for a quarter or two, and beyond that, possibly things are going to be fine, and which is why the stock reaction was not so negative. We have already seen a more than 40% kind of a stock reaction. So largely, worst is already getting there in the prices, and which is why I feel that it's a now buy at current levels.
Right. How about NBFCs like Shriram Finance and Bajaj Finance?
I think Bajaj Finance also will tend to benefit from the fact that because of the budget. On top of it, I think the numbers for them were quite good. AUM growth was 28%. This is one of the few NBFCs which has been maintaining good run rate. I think one key concern was that Rajiv Jain was expected to sort of move out, but he's clearly stating that he's going to remain in the company in the executive role, though not as MD. I think that has provided a lot of comfort, and which is why I feel it's a buy. Shriram Finance continues to sort of do well. They've been doing very well in the CV side, plus they're looking to sort of modify their book. So numbers were quite steady, very strong performance. Continue to like the company.
Right. So we also had Sun Pharma's results with in the Nifty 50 itself. So what happened there?
So revenue growth was quite decent or good because domestic growth is good. US growth might appear flattish, but where the company is focusing on this specialty business, which continues to sort of do very well. So which is why we continue to like.
Right. One more company which we have been continuing to like for a while in the cement sector is I think Ambuja. What has something changed in a bullish stance there?
So numbers were not really good, Vishu, because all the operational performance got impacted. I think overall sense is that the volume growth for the company was good, but we are still seeing challenges in some of the southern markets. But good part is that worst is already behind us, and company is talking of cost reduction, and again the capacity expansion is again going to be there this time around, more from the organic side. So we continue to sort of maintain a buy.
Right. Bharat Electronics.
So Bharat Electronics, see, last 9 months they've got an order inflow of about 11,000 odd crores. What they're saying is 25,000 crore for this year, so which means Q4 is expected to be very good. Current quarter execution was also very good. Even for next year, also they are expecting order inflows of 25,000 plus crores. So obviously, this company continues to do very well in the defense space.
Right. Let's viewing beyond particular these stocks. I think steel also saw some quite bit of movement. So any outlook forming there in the sector?
So yes, so while you look at the steel numbers, you had companies like JSW or Jindal Steel and Power came out with their numbers. Now, if I have to sort of highlight some of these, one, I think clearly this is the last quarter where you have seen the lowest EBITDA per ton. Our sense is that EBITDA per ton has bottomed out. There are two, three reasons why EBITDA is going to improve. One, in the post-budget now, government is expected to come up with some safeguard duty. NMDC has cut prices this time around for iron ore. They're looking to possibly cut more. And since the government is looking to put safeguard duty, a lot of players have started to sort of import less. So which means that domestic pricing scenario has gotten even better. So our sense is that from current quarter onwards, I think steel sector is offering a good risk reward and can potentially offer a lot more better upside. So this is one space which we continue to like. I mean, be it say JSW Steel or General Steel and Power.
Right, right. Uh, I think auto also saw quite a big set of numbers coming out with their results with Maruti, Tata coming out. So how was the outlook there?
So I think when you look at Tata Motors, the reaction was not so great. Largely because see, when you look at the demand environment is clearly a challenge in an economy like China. Then on top of it, Trump tariff policies is creating uncertainty in markets like US. Otherwise, domestic portfolio is expected to sort of do well, but which is why we had to sort of downgrade it to hold because we are still not very clear how the global portfolio will work. Domestic oriented players are doing very well. So Maruti did okay, and margins were sort of stable. And like I said, they could be a beneficiary of this. On top of it, if the government comes up with a 8 pay commission, this is another company which can benefit. But I think Maruti needs to improve or launch far more products for us to get more comfortable with a buy. I think that way Bajaj Auto did very well. They have maintained their 20% margins. Their exports are doing very well. And I think with this budget also, things have been good. We have seen a very good correction in the stock. So current levels offer a good opportunity to buy. We have a target price of closer to 10,500 on the stock.
Absolutely. Well, these results were all interesting. I believe as of this moment, budget is going to more decide the direction rather than the results as it looks like right now. At least today's movement dictated.
Absolutely.
Uh, right. With that, this was a wrap. Thank you so much, everyone, for watching, and thank you, Pankaj sir, for sharing your insights with us.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.